Okay, Dan Rawich here. Saturday, June 11th. I just want to record an update because the a lot of the trading videos in the course show how my system works. And since I recorded that course, I automated these signals, and I'm super proud of how they came out. They work unbelievably well. They're almost obvious and don't need a whole lot of instruction. But what I wanted to quickly talk about is how do you weed out false signals? Because when the market's sideways, you're going to get false signals. So there's two ways to do it. The primary way, and which we talked about in a lot of the videos, is to just have a keen awareness about support and resistance. I really can't tell you how important that is. And it's very, very simple if you allow it to be. So let me talk about what I mean here. Here is a buy signal. Now, before I take that, I'm going to ask myself, did anything happen before that buy signal that might create a problem? In other words, is there any resistance to this signal? And if I take this line and I draw it, I can see there were 1, 2, 3, 4, 5, 6, 7 candles, all at about the same level, all that told me that if I take that bull signal, I'm going to bump my head almost instantly. And keep in mind, range bound is the rule. Stocks will tend to move sideways more than they move up and down. And it messes with literally every signal I've ever seen anybody develop. We've tried, and I think we've done a good job weeding out a lot of the issue. Some of it comes from just watching the meter here, making sure the signal's strong enough. But to me, it's pretty simple to just look and see where the problem would be. And so I wouldn't take a bull signal until I broke above here. Okay? Now, what about a bear signal? Or is there any problem that could stop a sell signal? So you could see this one came in on this candle, and the actual signal actually came in at the bottom of the candle. It's hard to see, but you can see this little kind of pink arrow thing right here. So I'm going to look back and I'm going to say, is there anything that could stop this thing from going down a lot? And so what am I going to do? I'm going to look backwards and I'm going to go, interesting. 1, 2, 3, 4, 5, 6, probably like 7 and 8. So there's a whole, and then all the way back to here. So what we have here is a very strong support. So any bear signal that comes in is going to have a really hard time breaking below. So we would ignore that one. So just by doing that, we got rid of 1, 2, 3, 4 bad signals. But all of a sudden, the fifth one starts looking very interesting. And the reason for that is we got the signal. We looked back and said, what can stop this thing from going? We already had our line in place. And after the signal, on the very next candle, we came down below that line. That's a signal you would absolutely want to take, and you can just ride it down until it gets you out. So you're going to enter as close to the line as you could. In that case, it's about, let's take it down here to be conservative, 868. And then you probably would have gotten out down here because it would have been an unbelievable system. I mean, that would have been 100 points or something. But if you waited until you got the exit signal, you would have gotten out at about 795. So again, being conservative, that was about 880 something to 785. Did I say 785? 795. So that's, 20, 25 points. Not bad. So then it happens again. We get a bull signal. The first thing I want to know, is there anything that could stop me that might make me hit my head? Well, it's the same line. You have to remember that support and resistance are the same thing. So I'm not going to take this. No way. And then I get a bear signal. And I have to play the same game. I have to say, is there anything to the left of this signal that might stop the price from really falling hard? And so I go back here and I realize and it just couldn't drop below this level here. And so, and this, by the way, corresponds with that wick there. So I'm just going to draw this across. Now keep in mind, none of these candles are here yet. All we can see is from here this way. It's always a good thing to remember. And so I feel like I know I wouldn't take this because I believe it's going to get stopped here and here, because you can see that it did 2 or 3 different times. Then I get a bull signal. Again, I look back. Nope, I'm going to bump my head here. Then I get a bear signal. That one's pretty close, but keep in mind, this one could have been a tricky one. And the reason is it did break below, and from where we drew our line. Now we could have drawn our line, if you see here where we got the bear signal, down to the bottom of this candle, because that's really where the true resistance was. I'm not sure that I would have done that. Just, you know, being as realistic as possible, I would say I might have taken that signal right there. But if you notice, it got you in and it got you out. You know, it was a very quick fail, because we always set our stop losses just above the point of support. So if it broke below, our stop loss is right above the line, so it's a very small stop loss. And even if you did lose a few bucks on that one, now we got the next bull signal, and this is what everything is about. It doesn't matter if you take a loss here or you fell for that one there, because what you're waiting for, here's a bull signal. Again, I look back, I see what might stop it. I already have this line in place. All I'm waiting for is a break above this level. And you can see that it broke on this line at 891 and it got you out. That's that pink line up here at 1106. So that was a 200 point move. It's okay to take some 3 or 4 point losses, because ultimately you're going to ride these tremendous trends. You just have to recognize support and resistance. So let's just do it again. Here I get a bear signal after a big run. And by the way, other things that matter, we got way overbought here. The RSI is above the line. Our choppiness indicator, which we haven't talked about, is way down here. But for now, let's just look at the support and resistance rules. I see a bear signal. I look back. I say, what could have held it from being real? I draw this line across here, because you can see how it was stopped here. I get the signal, and the next candle comes through at 1067, and it got me out when this bull signal came in at 1011, 50 points. Then we get a bull signal. Remember, my line's already here. I look at this, I say, no thank you. I know I'm going to bump my head here. Then, oh, by the way, I also got a bear signal before that. So let's do that. Bear signal comes in. What might stop it? Look backwards. There it is, clear as can be. You're not going to take a trade in this range. This is the range that the stock's established. So we missed the bear, we missed the bull, and then we get this bear signal, and the stock comes right through it. You enter somewhere around 970-ish, and we got the exit at about 909, 60 points. We're talking about wealth accumulation when we talk about these kinds of moves, guys. And so we did not get another bull signal, but we did get a new bear signal. Once again, same game. I got to look back to see what might make this not good. Okay, it looks pretty clear. By the way, it's very near this other line. So I'm not going to take a bear signal unless it breaks below here. Well, the very next candle after the bear signal came through at 875, and the system got you out at 765. That's over 100 points. So I hope that makes sense for you guys. Here's another example of just some false signals that I don't think you would take now that you know what I've told you. The first one was a bear signal. I need to look back and see what stopped the stock. Well, these two did. Just these two little wicks were enough. And then, of course, normally you can draw this across, and you're going to find that these things don't happen in a vacuum. There was a reason these two wicks stopped. it was here, and it was here. So I'm not going to take a bear signal, and I'm going to draw this further across the page because I know this line's going to come into play again. They always do. Then I get this bull signal, and in some ways you're like, wow, it's on support, that's pretty good. But you have to do this. You have to go back and say, what would stop this? What are the high points? And I would say they're here. I'm going to draw that across. And I think we'll find, I don't know yet, but this line here is going to correlate with something else. And there it is. Stopped here, big problem with this line and with this line. So now we got this bear signal on Thursday, and if the next candle comes through it, that's going to be a really good trade, because if I look backwards and I think what might stop this thing, it's all the way down here. And so when I can answer that question and there's enough of a run, I'll take it. So if you break out below this 696 line and you get out of it at 636, it's another 60 points. So I hope that helps. I'm gonna do just a couple more on a different stock. We'll just randomly go to Microsoft here. And by the way, I'm on the day chart. It doesn't matter. Every chart is the same. It doesn't matter what time frame you're in. So let me get rid of all the drawings. We'll get nice and clean here. And we'll just kind of start here. Actually, we already know this one went up. So let's just kind of play this out here. Here, that's not a, by the way, that's not an exit. That's an exit from this. That is not a sell signal. Now that, whoops, well, it cheated. I didn't mean to, but that's a sell signal. I'm going to make this real wide. So I'm going to look backwards and I'm going to say, what might stop this? Well, we got this guy and we got these guys. Not quite as obvious, but these guys are a problem, just like that wick was a problem. So if I draw this across, I will see that this area came into play plenty of times. So I am not going to take this signal unless it breaks below this line. Well, it did. So again, it's usually you're going to get an opportunity to enter near the line. Not always, but very often. I try to be conservative and come back a little low. So I would say realistically, probably would have entered this one at about 11.29. The only thing that would concern me is right here, we do have more support, which we don't want. So again, I would have drawn this line and I would have drawn this line, and I'd have to calculate, does the fall through here, if it stops here, is that enough? So if you took the signal at say 330 and it fell to 318, that's plenty. That would be a good trade. And sure enough, it came down. I'm going to wait until the system tells me to cover, but it's likely that it could hold here for a couple candles. Nope, came right on through. We're going to wait. We're going to wait. We're going to wait. Okay, most likely I'm out on this candle. And the reason is it found bottom, and it was the first candle that actually had a higher low. So, but if you didn't want to be clever enough, or you're not clever enough yet, you will be, then get out when this one tells you. It's still a tremendous trade. Okay, so now I'm looking. I got another bear signal. First thing I'm going to do is I'm going to try to figure out what's going to get in the way here. And I would say, you know, something around here, a little bit lower maybe. And probably if I drew this across the page, we'd find out it came into play. But that's all I need to know. So now I get my sell signal, and I want to see if it's going to come through this line before I do anything. Okay, it came through. That should be a pretty good signal. We're going to enter this thing at about, what is that, 310? And I'm just going to wait until the system gets me out. Again, I will typically exit here because it's the same idea. Down, 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 whoops, not down. It doesn't mean it won't continue down, but this is often indicative of the end of a trend. You can just wait for this pink arrow if you want. Still coming down. Still coming down. So I got out too early. Should have waited for the pink arrow. And by the way, once I got out, I would have done this. So I said I'd probably get out here. Well, I'd become acutely aware of where we stopped, and I would get back in on a breakthrough there. But anyway, let's just keep following it. Let's pretend you had more discipline and you just waited for the pink arrow. Wow. Okay. I mean, waiting for the pink arrow, you're not going to catch the bottom. I mean, you could have gotten out of the bottom of this wick at 278 if you waited till we got the exit candle. It was 297, but still, that trade came from 310 to 297. That's a really good trade. Okay, now we're just kind of cruising. We have no signal. There's a bull signal. First thing I want to know, what's going to stop it? And it looks to me like these 3 wicks are a bit of a problem. And I'll draw that across, and wow. Notice how it almost exactly nailed that line. We know this is formidable. I'm not going to get in a trade unless I get a close above this line. Right on it. Right on it. It looks like it's breaking out. I have real doubts about this, by the way, and the reason is volume just keeps going down, and we really haven't talked about that. But typically when something does break out, like which one was up here that broke out? I can't find it. But I would say you would be within your right to take this trade. For me, I'd rather see another candle with more volume, and so what if I miss a little bit? I'm not going to get caught in a reversal. All right, so good decision. It did kind of stick its head up. Oh, and by the way, I'm drawing these lines really quickly, and the difference between here, which is really on that line, that was a better line. It did not break out. It tried to, and it failed. So I'm staying out, and I don't need to wait for the next bear signal. I'm already drawing a line. I've already determined where the support's going to be. So if I do get a bear signal and it's close to this line, I'm not going to take it. So here we go. We're waiting. We have no signal. There's a bear signal. It's even worse than this down here now because it created more support with all these wicks here. So now I needed to break below here or I'm not going to go in. And we get another, so false signal. I just take my same line and draw it across, and I already know I need this to break above that. Didn't do it. Okay, now we get another bear. So you see how we're weeding out all these false signals? It's pretty awesome. This will get your win rate like through the roof if you do this on every signal, because Flight Station finds trends and keeps you in them pretty darn well. Okay, so we got a signal. We got a break below here. We are going to enter this trade as long as this wick is not too close. That's only 1 point from here to here. I just like, to get as sure a thing as I can. So I need to see a break below here because from here, this is 299 and this is, oh, I'm sorry, this is 285. I would absolutely take that trade on that line at 290. Looks like it's about 298. And let's see what happens. All right, well, it got us out on the next candle. So it was about a break-even trade. You can see it got you in and out at the same time. That's okay. That's okay. We fell for one. We get another bear signal. We say, no way, I'm not falling for that one. And now I know that the line needs to come down here because that's the problem. So I'm not going to take a short signal unless it's below here. I'm not going to take a long signal unless it's above here. Let's go. It didn't make it. Okay, this one made it. Looks like it could be a decent signal. We would enter this at about 291. Let's see if we got faked out or not. Nope. 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 Boom. Okay. So the bull signal and the exit are pretty much the same thing. So this one got you in at, what did I say? I got lost. I thought it was 298. Well, it's not. It's about 292. And again, if you were quick enough, you would have gotten out here. Once these candles start getting these wicks on them, you could have gotten out at 278. If you waited till the bull signal, close to a break even. Close. This exit didn't happen fast enough. But again, you may probably made a couple of points here, depending on where on this candle you got out. All right, we're gonna keep going. I'm almost done here. I think you guys are getting the idea. This line up here still is in effect. Nothing different. Nothing has changed. Just like this line is still in effect. Nothing has changed. So we're waiting for a break above or below. There's a bear signal. I'm gonna ignore it for now, unless we break out. Okay, there's the breakout. I'm going to go in here at 290. A couple things I want to point out. We do have this wick very close by, and we do have this resistance right here. So we kind of had this double level of resistance, and it kind of does line up with this old one here. So this break below here, probably a problem. The more I look at this, I want to see a break below this line here. So I'm going to wait a minute. Okay, there's a good solid breakout. 284. So we lost, 5 points by not jumping sooner. Wow, so this is still a very, very choppy market. Out at 284. And again, you could have made a lot of money, 14 points. And I'm just going to tell you, we would never not take profits at a 14-point move. We are, especially when we've experienced this kind of chop for the last Lord knows how long. And I want to point out what really happened here. These wicks are what happened. So if you draw these across, it's not surprising at all that we stopped here. So what's the moral of the story? The moral of the story is, by knowing that this is here, it was okay to take this trade, but you would want to make sure you got out where the next level of support is. So if you entered here, probably the best entry would have been here, 290, exit at 275. But if you did enter at 284, you're out at 275. That's still, what, 9 points? Okay, so 2 more and we'll quit here. Hopefully this is making sense. I don't know if you could see this too much, really. Unfortunately, my support has crept up here now, so I really can't trade unless I get above this line, and I really can't trade in case I get below this line. And the bottom line is, this market has not stopped chopping. A good time to bring up the choppiness indicator, because hopefully this is starting to sink in. This blue line, when it is climbing and when it's over 50, it is telling you the market is choppy and to stay out. So you would really not want to take any trades until the choppiness indicator gets back below 50, or at least it's on a good decline. And you can see here, it just keeps going up. And so this tells me we're probably going to be flat for a while until the choppiness indicator stops. So it's a good thing to incorporate into your thought process. So we know our levels, right? We're going to ignore that. We're going to ignore that. I think we're still going to ignore that. Yep. Choppy indicator was going down, but it's curling back up again. Tells me this is probably a top here. Still not no bueno. Okay, maybe it's breaking out here. Choppiness indicator is dropping. We do have a breakout at 299. I would probably take that very reluctantly, because choppiness indicator is still a little flat. Volume's light. but I think this might work. And just remember, it's okay if you're wrong, because if you're wrong, you're going to get out on this line. You're going to allow this thing no room at all. It's supposed to go up because of everything that we've said, the signal, the breakout, everything. If it does not go up, then it was a false signal, and it's okay. Just get out with a tiny loss, because remember, we're waiting for these big trends, and they come all the time, especially on the shorter term charts. So let's see if we got in, let's see if it worked. Not looking too good. Volume's really weak, and it's not going anywhere. So I would probably give this one more candle, see what happens. If it can't break out here, I'd probably just get out of the trade and wait. And I do that all the time. I'll jump out, I'll jump back in. What you never want to do is say, oh, you're not fooling me again. No, the more it moves sideways, the more times it looks like it's going to break and doesn't. When it does, you absolutely need to be there, because those are those 30, 40, 50 point moves. So maybe this falls back here. My guess is it probably will, but I don't need to know that. All I need to know is it triggered my signal, and I'll get back out if it falls down. I'll get out immediately. Okay, it's still kind of moving, slowly creeping up. So it's not bad that we're in this. Choppiness indicator is coming down. Volume's holding in there okay. There's a nice move. Choppiness indicator under 50. Now remember, we did enter this one on this line at, what was it, 299. Let's see where it takes us. We get to stay in this thing until either a red candle, not making a new high, or the actual exit. So that's a red candle. This does not mean that the trend is over, but what you want to be aware of is 3 times, it tried to make a new high and it didn't. And that just said it's tired. It might break through again in a minute, but meanwhile you entered at 299 and you're exiting at 316. That's 17 points right there. Okay? And we get the exit signal right here. So that one came pretty timely. Okay, hopefully that works, guys. If you have any questions, obviously reach out to me, Dan at universityofoptions.com. One thing I will tell you that we're working on is this meter is really, really important. This tells you so much. It updates itself on every candle. So you're always watching to see if this signal is getting stronger or not. You can see the current signal is 82% bearish, not bullish at all. And if we go to modern times, I think it'll be obvious. Of course, that's a very bearish candle. By the way, just looking at modern times, signal came in here. I'm looking to see what might stop it, and you can see all these little wicks, and they go right across here and they cover that. I would enter here, but I would be prepared to exit here on this line. So even entering on this one at 266 stocks, now it's 11 point trade, and when it came in, it was so bearish that you probably would have taken that trade. But what I started to say is I'm working on a system that when the choppiness indicator is going up, and if it's over 50, you're not even going to see these signals. You're only going to see signals when the choppiness indicator is dropping or below 50. Now, we'll miss some trades because of that, but we'll also miss a lot of this sideways stuff. If you can learn how to trade through this chop and ignore it, it will be better than me kind of stamping out signals as they come. And you'll have the option. It'll just be a check of a box whether or not you want signals to be overridden based on choppiness indicator. All right, guys, that's it. I'll talk to you later. Bye.